Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're getting into week 22 of our portfolio update. This is as of December 21st, 2024. Also my birthday today, so happy birthday to me. We actually had a pretty bad week, ironically, on this special day for me, but we're going to go over that. So let's get into our numbers. So as of 12/21, my day, 2024, we're at $321.30 for our portfolio. See the different pie allocations here. So first week that we're really down this much, from December 16th to December 21st, we had net cash flow of $30. So that was a $30 deposit on the 18th. That was cash going into the account. We'll cover that when we get further in the slides. We're down 1.19% for our money weighted return. Down 1.19%. We have a market loss. I know it says market gain here, but it's a market loss of minus $4.41. 1 week we lost $4.41. But we did get a dividend of 12 cents. And basically the reason why everybody went down, not just me, everybody went down. Wednesday was a very volatile day. We'll cover that. But the Federal Reserve had a meeting. They cut interest rates, I think, by 25 basis points. Can't remember exactly for sure. But the market just took a fat L that day. It was crazy. I haven't seen that since like August 5th, which was another day where the market really took a big hit. So that was our weekly. So this is our monthly data. This is from November 21st, 2024 to December 21st, 2024. We have a net cash flow of $60. So you see 61.81. So that's that $30 deposit, cash deposit on the 18th of December, and $30 on November 27th. Remember, every 3 months, $30. I mean, every 3 months, every 3 weeks, $30 gets cash deposited into the account and gets allocated to the investments. So we have our money weighted rate of return down 0.31%. That 1 week really fucked us up. Down 0.31%. I think it was I don't know if this is the first time I've had a bad monthly return, but it's definitely been a while since I've had a bad monthly return for this time period. Market loss, negative $2.94. So $2.94. Still had that 12-cent dividend. So very bad week. Quarterly, positive but low return still. So still week 22. This is from September 23rd to December 21st. Net cash flow of 150. So you see these 5 stair steps. That's 5 different cash deposits over this 3-month period. So you got stair step 1, 2, 3, 4, 5. So every 3 weeks, $30 cash deposit into our account. Our money weighted rate of return is up 2.74%. So it's lower. Like this 1 week really kind of brought down the average just because everything came down. So we're going to see how it goes, but it was definitely a tough day. We had a market gain of $5.84 over that time period and a dividend of 47 cents. So this is from 3 months, from September 23rd to December 21st. Quarterly data. Now our weekly percentages. Now you can really see it. So we have our target allocations here on the right. We have our gold ETF GLD at 30%. We have our US dollar ETF UUP at 20%. We have our government bond ETF GOVT at 15%. We have our commodities ETF USCI at 15%. We have our equal weight stock ETF at 15%. And we have our Bitcoin ETF at 5% IBIT, or equal weights RSP. So gold, in 1 week down 0.9% for a market loss of 85 cents, 0.85. US dollar up 0.83% for market gain of 52 cents. This was our best strategic asset for this week. The only thing that really went up was the dollar. Our government bond ETF down 0.64% for a market loss of 30 cents. Our commodities ETF down 1.79% for a market loss of 85 cents. Our equal weight stock ETF down 3.04% in 1 week in 1 week, down 3.04%. That's a lot for the ETF. For a market loss of $1.42. Bitcoin even down 5.37% for a market loss of 85 cents. So it doesn't surprise me that Bitcoin's down 5% or more in a week. The previous couple weeks, I was showing you the IBIT ETF. We were having returns like 20%, on a monthly return like 40, 50, on a quarterly return like 60 or 70%, you know, so huge returns. So now we just have a 5% in a 1 week period here. So this is that weekly period from, was it the 13th? 16th to the 21st. What was the actual date? Yeah, 16th to the 21st. So that was the weekly return. Monthly return. So from November 21st to December 21st, essentially. Gold ETF down 1.12%. Market loss of 99 cents. US dollar up 1.58% for market gain of 93 cents. Like I said, the only thing going up is a dollar. Government bond ETF down 0.69% for market loss of 30 cents. Commodity ETF up 1.49% for market gain of 65 cents. This ETF is doing very good for a long good time. Commodities down, stocks down 3.42% for market loss of $1.48. And Bitcoin over the span of this time period, only up 2% for market gain of 0.29 cents. So this is monthly from November 21st to December 21st. And then you have our quarterly return, which is September 23rd to December 21st. So you have gold down 0.89%. It's like the same, almost the same as the week. Gold down 0.89% for market loss of 65 cents. US dollar up 7.77% for a market gain of $3.17. So dollar is definitely doing good over that time period. Bonds down 4.20% for a market loss of $2.08. Commodities up $5.15% for a market gain of $1.77. Equal weight stock down 2.87% for market loss of 0.95 cents or 95 cents. And Bitcoin, here you go, up 54.99% for market gain of $5.32. So at the very least, Bitcoin is doing good. But you see stocks just horribly getting wrecked right now. So this is what I was talking about, our transaction on December 18th. So every 3 weeks, $30. As you see right here, 5 buys, $30.08. $30 gets cash into the account and then buys up our assets. So we bought $5.43 worth of our US dollar ETF. We bought $9.58 worth of a gold ETF. We bought $3.78 worth of commodities ETF. We bought $5.04 of the government ETF. Pardon me. And we bought $6.25 of our stock ETF. So this was our December 18th transaction. I feel a sneeze coming on. Illuvium staking. So currently we're at a token value of $41.80. We have 4.97 ILV locked up, and we have a current market value of $207.63. And I'm happy to say we got another revenue distribution payment. So this is our third revenue distribution payment. And we have our 2 previous combined revenue payments down here. So we got a revenue payment of 0.012 ILV. Man, sorry, I gotta clear my throat. And we have a total combined 2 payments of 0.012 ILV for our weekly, our revenue distribution. So we have currently our 5 different deposits, our staking deposits. And since today's the 21st, usually around the 25th, I'll have another one. So basically on Christmas, pretty much. Just do that on my phone real quick. So we have our first stake from July 27, 2024, which unlocks in 218 days. We have our second at August 24th, 2024, which unlocks in 246 days. We have our third on September 25th, 2024, which unlocks in 278 days. We have our October 25th, 2024, which unlocks in 308 days. And we have our November 25th, 2024, which unlocks in 339 days. So each time, the very first stake was $100. At the time, I bought $100 worth of ILV. So whatever the price was on July 27th, I bought $100 of it. And then every time after, I just bought $40 and deposited it. So on each of these days, whatever the price was, about $40 worth. Obviously, the best bargain so far was in October, because $40 got me 1.11 ILV. So the price, I think, was maybe in the high 30s, low 40s or something. It's good. Good times. So by next week, which should be post-Christmas, pre-New Year's, you should see 6 of these line items in. So we're going to add $40 more, stake some more. And here it is. As of week 22, our revenue distribution payment, 0.012 ILV for market value of 49 cents. So we have just about 5 ILV. I hope I'm not getting sick. Just about 5 ILV. Right? Yeah, just about 5 ILV staked. And we have 3 payments, so we're probably gonna have about 0.024 ILV total claimed in revenue distribution payments, and you can immediately spend those. These when I lock them up, they're locked up for however many days, the ones that I bought. But then once they're unlocked, I could draw them. I could claim them whenever I want. Sorry, I can claim them whenever I want. Or I could just leave them staked and they could keep getting me revenue, but the point is I can unlock them and claim them whenever I want once the time is up. And that's our weekly numbers for my birthday, the weekend of my birthday. Oh, man, coughing too much. Now let's look at the horrificness of this week. So we got our gold chart up here. You see it kind of coming down. It broke our trend here, unfortunately. So post-election here, we had a big drawdown coming down, and then it bounced off of our trend line, and it kind of went sideways. And then this past week on Wednesday, like I said, the Fed meeting brought it down and broke that trend line. So gold now back here, you see it broke this trend line, but it came back up. This is back in February, March. It broke the trend line, came back up. I don't know if it's going to do that again. I have to watch it next week and basically see, like, okay, is this a reversal now? Do I need to start reducing my position? So just depending on what happens. So if it comes back up into this trend, it could be bullish, it could be positive again, and I can leave as is. Or if it continues breaking the trend and the momentum's coming down off of it, I'm gonna have to reduce my position. Man, struggling. But as of right now, as of the time of this filming, we still have it at 30%, our gold position. So, but next week's going to be an interesting week because I might reduce it depending if the position's been coming down like this and it keeps coming down. I'm going to have to reduce it. I don't know by how much. I might drop it by 5 or 10% because it's so high in the portfolio that if we're having basically a momentum shift and it's selling off now, I don't want to have a third of my portfolio going down. I'm going to have to find out. On the opposite side, the dollar's doing fucking great right now. This dollar position has just been coming up. It went up on that volatile week. So that was the only thing in my portfolio that went up. So, we came to this wedge pattern here, broke down, then came back up, and it's been coming up. So now it's back in this bullish trend. And it's pretty high right now. I don't know if it's at so from was this September 2022 where it hit this previous, or October 22 when it hit this previous high. It's right around that same high right now. So I wonder if it gets to that high. It hasn't had a high since before 2008. If I look at the DXY index, I'm sure it goes a lot farther. At the very least, with this ETF, we're near the historic all-time high for it. So if the dollar keeps going up, that's going to have interesting ramifications for everything else, but we'll see what happens. But as of right now, this is a 20% position. I might, if I reduce my gold position, I might put it in my dollar ETF. Just depends. Because this right now, that's the only thing that's really going up, like this strong too. So the dollar's done good, and it was the only thing on Wednesday when the market crashed, when volatility hit, that really went up. Now the sad chart of my equal weight ETF for my stocks. Look at this side. Look at this limpness coming out of my trend right here. So here's August 5th for reference. This was a highly volatile day. It broke out a trend. Then it came back and then it tapped on this trend a little bit, broke it out, but then just this shit's just leaking out, just big time leaking out. I have it at 15%, so it's not a major position in my portfolio, but I might have to reduce it. I don't know if stocks start coming down, you know, that's not good. That might be a crash scenario, but right here for sure, the equal weight, because I use the equal weight ETF, it's coming down. If you look at, as an example, the S&P 500, you know, it's kind of near its top trend. Let's see, I put these bars at, how far back do we go? Here we go. This goes back to November 22, just in this long bull trend. You know, it broke down here in October 23. It's been coming up. It's kind of a spike pattern, yeah. And then it hit this, it's in this top trend, but like it just dropped down so hard. So the S&P 500, which is not equally weighted, you know, heavy in the big tech stocks, it's coming down, but it's still within its bullish trend. Whereas my equal weight ETF, you know, it's not in its trend. It's coming out of its trend. So we're gonna have to watch and see next week, like I said. And it's probably low volume next week too, because it's Christmas week, you know, it's probably not gonna be a lot of trading. So this might maybe go sideways or something, maybe go a little bit up, we'll see. But yeah, hella volatile week. Look at, where's the VIX? Where's the VIX? There it is. Look at the VIX. Look at this goddamn thing. So this was August 5th. It was a huge one. That was the drop in it. And then we have this other huge one right here. But this, obviously August was way crazier. But if you look at this spike relative to the others, you'll see this one huge spike right here. It's got on 1 month. This one huge spike, just boom. This was in from, it started the 18th and it peaked, you know, the next day. It just went up so far, so fast. Crazy spike in volatility. And then now it's coming down, right? The volatility is coming down. But it went all the way up almost like touching 30, it looks like. That's crazy. So it was just a crazy fucking volatile day. When the Federal Reserve speaks, like, man, the market just goes crazy on it. All right, so we have our commodities ETF, USCI, still doing great. Still in this long 2-year trend. Going back to July 2022. So this will be a good place to put a little bit of money. Just because it's at least in a continuing uptrend. If I'm unsure of where to put my gold or whatever, I still think inflation's going up. I can still keep it in this ETF. It is pulling back right here, but of course, as it hit the top of this trend, that would make sense. Pulled back off these trends here, or when it hit these lines here. Now it's pulling back on there. At the moment, I have commodities at 15%. I could raise it to 20. Maybe if I sell some off gold, I could put 5% of that here, maybe 5% of the dollar. So I would have like 25% US dollar and 20% commodities. Kind of see where that's at. Like I said, all depends on next week, how it's going to go. We'll have to see what happens. Bonds crashing down again. On a 5-year chart, it's still relatively low. So going back to March of 2020, when we hit the peak, and then here we are. It kind of hit this low at October 2023, and it's still higher than that bottom, but it's, you know, it's coming down. It's crashing down. I have it at 15%. Maybe I should reduce that. Fuck, it just keeps coming down. I hate bonds so much. It's a horrible trade for me. At the very least, we get a dividend out of it, I guess. So that helps the portfolio in a tiny way. But bonds been coming down even on the volatile day. The 18th just dropped. This is the 18th right here, just dropped. Bonds just dropped on the 18th. So, you know, the lowered rates, we would think, which would have a different effect if the rates would come down, the bond would come up, but actually the 10-year yield went up still. So even though the Federal Reserve is lowering the interest rate, you know, the rates themselves are still going up, the market rates. So bonds still doing bad. Might have to reverse position on that, we'll see. We have Bitcoin, which of course hit its peak around 100 and it's pulled back since. What's it at right now? Bitcoin is at 97,000 right now, so it's pulled back. It's at 97,000 right now. Basically, once it hit 100, it's whenever it hits a big round number, like it gets like speculative, because like it's either going to go up or go down, or it's going to go sideways. So everybody sees that big round number, they all have price targets on it. But it's pulled back right now, so it hasn't had a big drop. All this right here, that this growth happened, it hasn't given it back yet. It's still kind of holding around, that 97,000 right now. We'll call it plus 95,000 for right now. Maybe if it stays above the 90,000 range, it might be able to hold it and still like continue upward. But as of right now, there was a lot of momentum right here. There's a lot of momentum, and now it's like giving it back. And that Federal Reserve meeting, same thing. If you look at it on a 5-day, it's been coming down even before really the Fed meeting. But it's just less. There's just more and more reason why it's been coming down. But that's just how the numbers are. Like I said, it was a hell of a week. That volatility alone, almost hitting 30. Yeah, that's pretty bad. It was a volatile week. We've had them before. We're always going to have them. That just is how it is. Whole point of the portfolio is, diversify your investments so you don't put all your eggs in one basket. Because even in volatile moments like that, everything could go down. Like I said, the only thing that really didn't go down was our dollar. Look at it on a 5-day. Look at this shit on December 18th. Boom. Look at that. Look at that. The only thing in the portfolio that really went up on that Fed meeting day was December 18th. That was the US dollar. So that's why it's in the portfolio. It's a strategic asset. It's a hedge. And we have it at 20%. So it would have been nice if I had the foresight, which is impossible. If I had the foresight to max out, which in my case would be 30%. Max out that position. That would have been better for the portfolio. That would have helped us out. But who knew that was going to happen on that day, and the volatility was going to spike like that? Like, nobody knew. They act like they knew. They don't know. Right, everybody lost money that day, and that's okay, because it was a very volatile day. But as always, I hope you've enjoyed the content. Week after week, I'm going to continue doing the updates and share the information, even on my birthday. All right, just for you. All right. So I hope you all enjoy it. Enjoy your weekend. We got Christmas coming up. Hope you enjoy that. See your family, spend time with them, love them. And then next week I'll see you before New Year's. So have a good day.